Hi traders, welcome to Profiling to Profit, the week ahead in futures. It is July 9th, 2016. Hope everybody's having a great weekend, and I hope everybody had a great trading week. Last week was all about the non-farm payroll here in the United States. Let's take a look at that number to get started here. Last week, non-farm payroll, after a really weak number in May, came out with actually a shocking number to a lot of people: 287,000 jobs added. Quite remarkable. Now, it's interesting that we had that many jobs added, but the unemployment rate actually increased on that. So, always a game somewhere, of course. So what does that mean to you, the trader? Well, if you were trading on Friday or coming into trading on Friday, you were sort of flipping a coin as far as what was going to happen. You had no idea what this news was going to bring or what the number was going to be. However, now the word on the street is now this gives the Fed some cushion to maybe even make a small rate hike at the end of this year. Well, again, how does that affect the traders? Here's what it doesn't do. It doesn't affect us one bit. Our job is to look at what we use to determine our risk and manage that risk while we're in trades, and of course try to find areas where we can get involved with the market with as little risk as possible, and of course have the largest win, and then if we are in a good winning situation, to push that win. So it really doesn't have anything to do with us. We just need to be made aware of when these situations happen, so we're not standing in front of a moving train when it's going by at 100 miles an hour. That's exactly what you don't want to do, because it can not only hurt your account, but it could basically wipe your account out if you're not careful. So always understand what numbers are coming out, when they're coming out, and either stand on the sidelines or make sure your position is hedged. So all right, so we're past that number, which is a good thing. It is what it is. We obviously the market rallied huge off the number and closed at the highs of the day or close to them. So what does this week bring? Well, we don't have a lot of huge news events. We have the regular news events that are out on a weekly and monthly basis. We do have a lot of Fed heads speaking. I'm sure there's going to be a lot of talk out there, but again, it's just talk. It's hard to track all these speakers. However, if you want to know they're out there, just take a look at the numbers and be aware of them or when they speak. Overseas, there's a couple things you need to be aware of if you're trading currencies or currency futures. We have Canada is, I think this is on Wednesday, the 13th. Yes, it is. Bank of Canada has a rate statement and, of course, an interest rate decision. And then on the 14th, Thursday, the Bank of England has a couple of news events, one of which is the interest rate decision over there. And then, of course, Friday, China is coming out with their gross domestic product, their GDP, so be aware of that. All right, let's dig into the charts here, guys. Let's go back a couple weeks. We had saw this area down here. Once we broke the 4250 area, we said we had this zone. This zone's been sitting down here for a few weeks that we've been waiting for to get hit. It did get hit, and it just absolutely rocketed off here. This was the Brexit vote. Come down into our zone. The zone does hold and goes up. Now, guys, this is what's important about identifying areas. Now, we say areas and not specific numbers. Here's why. We don't know if it's going to stop at this number at 4186.50 or if it's going to stop at 4155. We know this zone could hold, and we're looking for it, and we're going to use maybe a trigger in this. If you didn't see the last week's video, there's a week we talk about triggers in there. Are you going to scale into this? It depends on your style and your trading plan, of course, but the zone held, and there was an opportunity here to get long. If you did, congratulations, you had a phenomenal trade in here, and you still could be in this trade, of course. Now, what happened last week? Well, we again broke the highs of the previous week, and that happened well, it happened actually one day. It moved back into the range here on Thursday, and then on Friday we gapped up with the number and kept going. Now, where is the resistance now, or the support? We have support down here at the 44.50 area down to the 44.30 area. That would be the first zone, and then to the upside we have a zone at 45.66 area up in that 45.90 area. Now, we're right in the middle here, so which one is it? Well, they're both it, and here's how it works. Is if price moves down and tests this zone, we're looking for this zone to hold. The play is, the risk is just below this. If it does, the target's up above. If this thing gaps up and goes into this target, obviously the risk is above this zone, looking to come back and test this prior zone. If either one of these catches fire, then obviously to the downside we have a couple areas we can look at when that happens, and then to the upside, this thing may want to go up and test these highs up here. Now, it's interesting also to note that the indexes are not all breaking new highs right now. The NASDAQ is quite a ways away from breaking these highs at 47.39. The ES has gone ahead and made some recent new highs here at 21.25. Same thing with the ES. However, we do not have a defined area just above this. We are looking for this zone in the ES at 2107 down into that 2097 area to hold. If this thing holds here, then we have another swing to the upside, which could provide some nice movement there. If we get down below here, these were a previous week here. We were looking for this zone right here to hold and rock it out. It poked down below there. Of course, we didn't want to trade anything on the indexes last week because of all the news events. If they were just short term, and that's really not our MO. So we just sat on the sideline. So now we're looking at this zone and watching this. If this thing breaks down and starts balancing down below the zone, then we have a great chance of testing the lows of last week, and of course this POC that's sitting down here at 2051. And again, also look at the ES. We had this zone on the ES that came right into that zone and just skyrocketed off there, which is, again, I know some of you that had made this trade. We made this trade, and I'm here to tell you, I didn't hold on purposely, or I did not hold on long enough. I thought this thing was going to roll over, as did most other people. I do know of a few people who did hold on to this thing, and they made a phenomenal trade on this. So congratulations. All right, let's take a look at our favorite crude here real quick. Crude is acting very well. This thing is, as we planned our trade out and our zones, this thing has worked out great. We had a zone up here a few weeks ago. It was about 50 down to the 49 area. It poked up above there. If you had your stop out of that way, you had a couple chances to get involved in this opportunity, go into the short side with nice risk opportunity and reward. We have hit that first big target down here at 45. You could have peeled some off before that, but we do have our big target at 45. Our next big target down here is at 43. Now, two things I want to point out to you. Let's look at a little bit of this risk-reward situation. We had a zone up here, and I believe, if I remember correctly, we had ran this zone at about it's about $1.25. We made this zone up here, and it did poke out of the zone. And if you were using a trigger, this would have probably triggered off, and your zone, your stops wouldn't have been hit on this, and you would have had a phenomenal opportunity to be involved with this. Now, you notice that this went down, came right back up, and came back down before hitting our big target. Now, if you're risking $1.25 up here, and we're down here now into this 45 area, you're talking $1.25 to meet almost even $5 in a trade. And at this point, you could bring your stops down, which a good area for a stop would be above this weekly. And then now we'd be targeting down here to the 42 or 43 area, which would be a phenomenal trade. So what we're trying to say here, gang, is that we want to enter trades, no matter how you do it or what you use. You want to enter them with a small amount of risk, with a large amount of potential on it. Now, we think that over the next week or two, possibly, we could see this 43 area, and then of course if we get the train going, we like this zone down below here to look for opportunities for risk to the upside. So right now crude is acting very well. We've had some interesting questions about how do I get involved with crude at this level. We need to see a bounce. We could make a 50% retracement here. The first line of defense is right here, 46.50 area to that 47 area. Sorry about that. I had a phone call I had to take real quick. So our zone up here would be this tight. I'd keep it tight in here because this could start to balance, and we could see an inside week, and that means that the swings would test these value area highs and as well as the value area lows. Now, if we absolutely gap down into this area, this zone for us is off. So let's go ahead and take a look at the gold market and see what Goldilocks is doing here. She has been doing very well and continues to move up on a weekly basis. We thought that she had a chance of rolling over here and coming down our zone. Didn't even get close. She just kept going up from here. She's on a weekly basis. She's now one time framing up. So we've got a target up here that we already hit at 1352 if you're long. Another target at the top up here is 1392. Up in this area, long in the tooth to get long, so there's no risk up here. The risk is too much to get long up here. You'd have to have a huge stop, and so the risk reward does not work up here. So right now we're just going to wait and see some movement into the week first before we find some new opportunities to define some risk. So watch if we release any other videos, because if we see some risk that we could take in here, we'll go ahead and make a quick video and push it out to you. But right now we're going to stand on the sideline of gold. Gold has made a phenomenal move. Let's take a look at this. And if you did not catch any of this gold trade at all, I want you to go back and take a look just take a look at this market and find out where there was opportunities based on the profile. We saw this huge move down and this nice rounding bottom, and the profile would have told you on this igniting candle about the 1st of January here, around that first week, that there was an opportunity here. There was some volume in this, and then from that point we had an inside week, and then then it went ahead and just broke to the upside, had just a phenomenal move. Then we moved sideways in here, and we had some great trades in here. A fake breakout trade down to the lower area, a trade to the upside in here, and of course we decided we liked the long side long term, shall we say. Now some of you sort of beat us up a little bit, like why are we short when George Soros and everybody else is going long? Well, you understand George Soros' time frame is a lot larger than ours, and his pockets are a lot deeper. So we have to move in and out with the flow of the market and what the profile gives us. George Soros is looking to continue to buy, and he'll buy as far down as he has to make his trade right. He has unlimited amounts of capital. We do not. So we have to be a little bit more flexible in that. So as it stands right now, gold has made a phenomenal move. The lows down here, what was that, about that 1050 area, 1040 area, and then of course now we're up here at the highs at 1375. So anyway, it's we've had these fine moves up here. If you didn't catch any of this, don't beat yourself up. Just take a look at the charts, look at the profiles, see where you could have maybe had some opportunities to get involved with this market. Go down to a daily time frame and look at the daily profiles and go from there, and I'm sure you'll see some opportunities in there. Also, reminder guys, these profiles that we show on here, these are weekly profiles with 2-hour candles. They give us a great opportunity and great look at the profile and what each week is setting up and who's in control on this. So all right, so gold right now, we're on the sidelines. Let's take a look at the euro. Euro had an inside week. Inside week to us means that something's going to happen next week. Now the test is where? Well, let's go and let's pull this out just a little bit here. Let's tell you what, let's pull this out a little bit further here. So we are been going sideways now since well for a couple years now. So we've been going sideways, and this is sort of right in the middle right now. If you drew a line right across here, we are almost identically in the middle here at 111.18. So right in the middle of this junk. It's a coin flip for the most part. However, we have this big area up here that is sort of a magnet right now. This area needs to get cleaned up. We've been balancing down here. We haven't made any new lows since way back here. What is this? This is last year in March, or excuse me, yeah, March. And so we're looking, if they haven't taken this down on a lot of crazy news in Europe, this may be an opportunity for them to go up and clean this mess up above the market here. We'll just have to wait and see. Now, as far as what we see coming up this week, we have two zones, and they're magnets. Okay, the magnet down here would be the 1008.60 area, down in that 1008.20 area, 28 area. Up above, of course, we like the 113.17, and of course that 113.50. Those are big zones, but they're magnets. Okay, so define your risk. It would be good to use a trigger in this situation. Define the risk once you get in. There's really, the zone here is in the middle, and it's a breakout of the zone. The move will come from the middle here. So you're going to have to define your risk based on your trigger if you use one. If not, use a either a I hate to say a money stop, but use a point stop, and then be happy with that and see if you can get a runner up into these areas right here. However, these two areas are the targets. We'll see which one hits right now. Again, it looks bearish in here, but again, when you pull it out, guys, it's important obviously to pull these things out and take a look at them. When you pull them out, you're going to see, wow, this thing's going sideways for now almost 2 years, and you got to be careful in here. So anyway, should see some movement this week in that, and we'll see which target hits there, which magnet hits. All right, let's get back to our 2-hour chart here, and let's go over and take a look at the notes. The notes are in fuego right now. They're just going crazy. They hit a target for us up at that 134.06. This target was hit almost to the tick, and we had defined this target a few weeks ago. These things are long in the tooth. I do have a couple zones here. We believe it's about time for some profit taking, and we believe that the market could roll over and see a couple targets here. So here's the way it is. We went and had a very nice balanced week last week. We poked up, got rejected, came down, poked down into this the previous week's balance area, and that held, and then of course we moved up and closed at the value area high right now. So we did see some rejection from the buying up here. So here's two scenarios that could happen. We like this balance area as our risk area number one, and we have an area up here, and we're going to define the second part of that area. Let me duplicate this here real quick to just about up in this area. For some reason, my my other area got deleted, so it's 134.20 area actually, down into this 134.14 area. So here's the way this works. We've talked about this before, where price gets popped up out of last week's range and then moves back down into the range. I'm not looking to use this as a risk. I'm not going to trade against this. So I'm looking for this to hold and move back into this week's trade range. If it does, then I'm going to define my risk based on this week's trade range. Now, if we don't get outside this trade range and we start to get in this zone and just go sideways, then what we can do is we can define the risk above this zone, looking for targets down here at the 132.20 down to 132 evens. And if we really get the steamroller going, then we have just above the POC down here. So the risk here is really good in the notes. However, we need to keep it tight because notes can continue to go higher and higher and higher. There's no reason that they won't. We saw a very nice pattern here where we went up ran people out of the trade. It sort of balanced in here. As you can see, our POC is right in that area. This monster was at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 weeks of balancing before we broke out and we made these highs up here at 134. So just understand that these things can continue on. We think that now there is a chance of this rolling over and doing some profit taking. So some opportunity notes, just keep her tight in there. And then lastly, guys, is corn. We've been watching corn quite a bit. The lesson in corn isn't that there's a lot of things going on, because we have crop report coming up this week, and you never want to stand in front of that crop report unless you're either really well hedged or you have really deep pockets. So my suggestion is just to sit on the sidelines. However, we had this nice move. We saw, if you remember, Josh talked about the $3.78 move, and of course, if you held on to that, we had this beautiful move out of there. And this is why you never fall in love with a trade. Everybody who says you should buy and hold, here's exactly why you don't, okay? Because you get in and you have to manage the trade. Everybody up here at $4.30 some cents, we're probably thinking this thing was going to $5 at some point. Far-fetched, it wasn't. It's not going to happen. And of course, it rolled over, and now if you were long from up here in our area we were looking at, which is around that 390 area, you are losing a lot of money right now, and that's uncalled for. So just let this be a lesson that, hang on guys, we love trades, but we don't love the trade. And what we mean by that is that we're not going to love a trade so much so where we're going to hang on to it and get caught in a situation like this where we have limit down moves in corn and get hurt. This not only hurts, but it can wipe out your account. So manage the trade. You're never going to get the tops. You're never going to get the bottoms, of course. You just need to get some in between. Okay. Other than that, guys, that's all I have for this coming week. If you need some help and you have some questions, come on over to the website. We have a great ebook over here, 7 Secrets of Trading Success. We do have, of course, the free resources as we talk about every week. Take advantage of them. They are free. Download them, look at them, read them, and if you have questions, of course, contact us over here. You can either just drop your name and your email and your message, or you can go ahead and drop us a call. Either way. Hope you guys have a great week trading, and then we'll talk to you next week. Take care.